Good day, investors. In this video, we will take a closer look at Cloudflare. The company just reported a very solid quarter. Revenue growth accelerated, profitability improved significantly, free cash flow jumped higher, and management is now saying AI could become the biggest tailwind in company history. But at the same time, the stock is also down sharply after earnings and after-hours trading. So in this video, we'll break down the earnings figures and fundamentals. Then we'll look at the long-term growth potential and valuation. And finally, I'll give you my personal take on whether Cloudflare stock looks like a good investment opportunity now after the earnings release. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. So let's start with some of the key financial highlights from the quarter. As you can see here, Cloudflare continues delivering very strong growth. Revenue increased 34% year over year during the first quarter, while the company also maintains strong non-GAAP gross margins of around 73%. Cloudflare also now serves more than 4,400 large customers, highlighting continued strong enterprise adoption of the platform. And importantly, management estimates the company's addressable market opportunity in 2026 alone is already around $196 billion, showing just how large the long-term growth opportunity could be for the business. And when looking at customer growth, Cloudflare continues seeing very strong momentum with larger enterprise customers. As you can see here, the company now has more than 4,400 large customers, defined as customers generating over $100,000 in annualized revenue. And these larger customers now account for around 72% of total revenue, which highlights the company's growing enterprise penetration. This is important because larger enterprise customers typically spend more over time and often adopt multiple products across the broader platform. And when looking at net retention, Cloudflare reported a dollar-based net retention rate of around 118%, which is still a very strong number. And this suggests that many existing customers are continuing to adopt more products and expand usage across the platform. And it also shows strong customer engagement and healthy long-term demand for the company's services. And when looking at profitability, Cloudflare also continues showing improving operating leverage across the business. As you can see here, the company delivered an operating margin of around 14% during 2025, and management is now guiding for approximately 15% operating margins during 2026, even while continuing to invest heavily into AI infrastructure, product development, and enterprise expansion. We can also see sales and marketing expenses gradually becoming a smaller percentage of revenue over time, which suggests improving efficiency as the company scales. And another area that continues looking very strong for Cloudflare is the balance sheet. As you can see here, the company ended the quarter with more than $4.1 billion in cash and available securities, giving Cloudflare significant financial flexibility moving forward. The company also continues generating strong operating cash flow, with first quarter operating cash flow coming in around $158 million, while operating cash flow margins remained healthy as well, positioning the company very well to continue investing in AI infrastructure, product innovation, and future long-term growth opportunities. And now looking at guidance. Management continues expecting strong growth moving forward. As you can see here, Cloudflare expects second quarter revenue between approximately $664 million and $665 million, representing around 30% year-over-year growth, while second quarter operating income is expected to come in between approximately $90 million and $91 million, with operating margins around 14%. Management also expects second quarter earnings per share to come in around 27 cents. Management also noted that full year 2026 network capital expenditures are expected to remain around 14% to 15% of revenue, showing the company continues investing aggressively into infrastructure and future growth opportunities. So after looking at the earnings figures, it's important to understand the market opportunity for Cloudflare and where future growth could come from. As you can see here, Cloudflare has been steadily expanding its total addressable market over the years. And today, Cloudflare has expanded into much larger markets, including zero trust security, network services, developer platforms, cloud storage, and AI infrastructure. Because of that, management now estimates its addressable market could grow to more than $230 billion by 2028, representing a massive long-term opportunity for the company. And when we look at some of the company's future growth areas, management is highlighting markets like AI, Internet of Things, 5G, databases, and network services. So the bigger story here is that Cloudflare is evolving from a cybersecurity company into a much broader internet infrastructure and AI platform. And one of the biggest advantages Cloudflare has today is the scale of its global network. As you can see here, the company now operates across more than 335 cities in over 125 countries, with roughly 13,000 networks directly connected to Cloudflare's platform, including internet providers, cloud companies, and large enterprises. Cloudflare also says its network capacity has now reached around 500 terabits per second and continues growing. And importantly, the company now has more than 4,400 large customers, while around 42% of Fortune 500 companies are paying customers, which highlights the growing enterprise adoption of the platform. Cloudflare also says around 95% of the world's internet-connected population is within roughly 50 milliseconds of one of its data centers, which is extremely important for AI workloads, low-latency applications, cybersecurity, and edge computing. So overall, this massive global infrastructure network is becoming one of Cloudflare's biggest long-term competitive advantages. And furthermore, one of the biggest opportunities for Cloudflare right now is AI inference and AI agents. As you can see here, management is positioning Cloudflare Workers as a platform for developers to build and scale AI applications directly on Cloudflare's network. And the key advantage here is efficiency and speed. Developers can scale usage up or down very quickly, only pay for what they use, and deploy applications extremely close to end users globally, which helps reduce latency and improve performance for AI workloads. Cloudflare also says developers can integrate APIs, large language models, and workflows all within a single platform. And importantly, the company now has more than 3 million developers on the platform, which could become a major long-term advantage as AI adoption continues accelerating. So after looking at the earnings figures and long-term growth drivers for Cloudflare, let's now take a look at the valuation and analyst expectations for the stock. According to stock analysis data, analysts currently have a consensus buy rating on Cloudflare stock, with an average price target of around $237 per share. That average target actually implies slight downside from current levels. Analyst price targets currently range from around $140 on the low end to approximately $300 on the high end, indicating potential upside of roughly 17% on the bullish side, which shows that analysts still remain very divided on the long-term upside potential for Cloudflare stock. And if we look at the stock itself, we can get a better picture of the current setup. Cloudflare is currently trading at around $257 per share, giving the company a market cap of roughly $90 billion. The stock has also been a massive winner over the past year, rising roughly 110% over the last 12 months. However, following the earnings release, the stock is currently down roughly 14% in after-hours trading, which could potentially create a buying opportunity at a lower valuation for long-term investors, although the stock still remains very expensive relative to many other software companies, with the stock currently trading at a forward price-to-earnings ratio of around 229. So when we bring everything together, Cloudflare delivered a very strong quarter. Revenue growth accelerated, free cash flow remained strong, enterprise customer momentum improved, and profitability continued moving higher. But the biggest story here is that Cloudflare continues seeing strong momentum from AI traffic. Cloudflare Workers, zero trust security, and growing AI agent demand, especially around Cloudflare becoming a key infrastructure layer for AI-driven internet traffic. So in my opinion, fundamentally this was a bullish quarter. Growth remains solid, AI is becoming a real tailwind, and cash flow generation remains strong. The biggest concern, however, still remains valuation, because despite the after-hours sell-off, the stock still trades at a very expensive valuation. So overall, in my opinion, Cloudflare still looks like one of the more interesting long-term AI infrastructure companies in the market. But the stock is likely best suited for long-term investors comfortable with premium valuations and high volatility. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching and happy investing.